Welcome to Tax Tip Tuesday. What do we got? We got May 23rd. Where did May go? That's the question I'm asking. So hope everybody's doing well. Been a little bit of a crazy morning, so I apologize for jumping in here a couple minutes late. As you guys know, I like to start meetings on time and end them early. So again, welcome to this week's show. Certainly going to get into the protection component of your plan. We'll talk a little bit about investments. I've had a couple meetings this morning that have brought up a couple different topics regarding mortgages and real estate. So we'll touch on that. As everyone knows, the material here shared by me during this webinar has really been prepared. It's informational purposes only. This is my little legal disclosure. It's not intended to provide you tax or legal or accounting advice or anything like that. If you've got those people in your world and you hear something from me that makes you interested, then reach out to those types of people that you're working with. If you don't have them, then get with me and I will certainly get you someone on my team. So again, there's my little disclosure. Remember, we're always going to talk about the protection investment component of your overall plan, but we're always going to relay that back into the tax situation, that those types of strategies and or products that you may be using, and look at the IRC tax code, how we can take edge legally to make sure that you're keeping as much of the money that you're making and making sure that that you're appropriately transferring those assets across generational lines to your family or to your charitable philanthropic desires, if that's something that you want to do also. So last week we got into a little bit of Q&A. We can continue that today. I think I figured out the chat function. So if you want to chat, that's fine. But let's just try to use the Q&A also for anything that you guys want to ask. And while I'm sitting here thinking about it, I'm just going to copy my contact information and just throw it into the chat so it's there. And then I won't need to do it again later on. So again, welcome. Good afternoon, everyone, to Tax Tip Tuesday. There's a bunch of names here that I see weekly, which is great. I really appreciate you guys tuning in. Hopefully, I'm not becoming boring. I'm trying to keep it interesting. If you guys don't mind, let me just call out a couple. Rhonda, where are you geographically? Lee, where are you geographically? Charles, where are you geographically? I think I said Rhonda, but Rodney also, where are you geographically? Okay, so Rhonda's in South Jersey. Again, these are just some people that I just, that I'm not saying they haven't been here, I just haven't maybe just seen the name and just want to know where you guys are somewhere in the country. What I'm going to talk a little bit about today, again, if I call your name and you want to where you're at, would love to know where you're at geographically. So I'm going to talk a little bit about this thing called an all-in-one mortgage that a client of mine brought up today. So we talked a little bit about it and I did a little bit of research on it. If that all-in-one mortgage thing that's out there, if you're familiar with it, then feel free to throw something out there. And then in addition to the mortgage conversation, and let me just start with a question. Is anyone out there using some type of financial platform that brings your assets, liabilities, investment accounts, checking accounts, things like that, all into one area? And if you are, would you mind throwing that into the chat, what the version of that type of tool is that you're using? I would like to just discuss that a little bit today and introduce you to a platform that maybe you know of and maybe you don't know of. So anyone using, I think one out there is called Mint, that brings everything together into one consolidated area. Anyone else using anything out like that? So what you're looking at here is a financial platform. This financial platform is called eMoney. Anyone familiar unless you're working with me and you happen to be my client, which I know at least a couple people are on today, they've got a leg up on you a little bit. I was just looking at Jill's comment. Velocity banking, yes, I've heard of that, similar to that. Let me introduce you to this, because the more that I'm around, it just slightly shocks me that more people do not know of the eMoney platform. You can't just go out there and get this. You have to work with some type of advisor that has this platform and offers it to the people who they have a professional or business relationship with. I happen to use this in my practice, so therefore the people who I work with all over the country have access to this membership, but you have to get it through some type of advisor. And what I've learned is, to me, I think this is the platform out we're bringing, and I'll put it into these words. On the eMoney platform, you can take any asset and any liability and put it onto the platform. Then if it is an asset and or a liability that, like a bank account, a checking account, a savings account, a mortgage, 401k, 3B, IRA, traditionals, Roth, simples, SEPs, anything like that, after you have it onto the platform, then you link them together and it becomes real time. So at any particular time, if you're looking for a personal financial statement or a net worth statement, then everything is up to date, basically to the minute. So if you have an investment account, and that investment account goes up $10,000 yesterday, then today when you log into your account, it's going to reflect increase. And what's great about this platform, if you're working with some type of advisor that you rely on to make important financial decisions, then that person may be managing something for you and it may not. For example, if you're a W-2B or you're working for someone and you have some type of retirement account like a 401k plan or a 403b plan or something like that, then most of the time some type of custodial relationship with your employer. Therefore, your personal financial advisor is able to manage that account. However, that doesn't mean that they can't go onto the platform so your advisor can see it. For example, is Frank and Joanna Miller hypothetical clients, and therefore if they are working with some type of, let's just say they're working with me and there's assets management, then those accounts would show up under the assets under management. And if there's assets that are held away, they would show up down there. So they're 529 plans or Frank's 401k plan, and Joanna, maybe she's a school teacher, so she has a 403b account. Those accounts are going to be held away. Therefore, our investment people aren't going to be managed those accounts because they're held somewhere else. However, Frank's whole life insurance policy is through me. Therefore, it would show up under assets under management. Again, what's great about this is it's any asset and any liability. So mortgages, jewelry, gold, anything that you can think of as an asset can be held here, and then the liabilities also. So if I click on the blue box and go into their net worth, that's going to show me their balance sheet. Let me make sure that's changing. And for whatever reason, if it's not changing on your end as I go through this, please send me a chat. So if I look at their balance sheet and I scroll down, then I can immediately see all of their assets, their cash, 401k plan, the 403b, the Roth IRA, the home, vacation, mountain home, cars, jewelry, permanent life insurance. All of those are assets to the Millers, and then their liabilities. Again, they've got their mortgage and credit card and everything on here shows me their net worth. Banks love eMoney. Because the net worth statement is under the reporting tab. If I scroll back up, you can see over in the top right, there's a reporting tab. And any particular time, if they want to submit their net worth statement to the bank because they're looking to refinance something, then obviously it would be right there for them. I scroll back up and go back to overview. And then I come up here and I click on the green. I go back to the Miller's investment accounts. Then it's just showing me just their investment accounts that they either have with our firm, or if they're held away, then they can be there. What's great about eMoney also is after everything is set up, then just about any hypothetical scenario can be run by your advisor. So if you're thinking about what year you're going to pay off your home, what should you take Social Security at 65, 67, 72, what RMD is going to look like if you have retirement accounts, the tax consequences. We have a lot of clients that don't want to be in California anymore or don't want to be up in New York anymore. What's the tax scenario look like if they were to relocate out of any of those particular states and move somewhere else that is in a, let's just say, a more taxable environment, like where I live, the state of Florida, where we don't have state income tax. So we can run any types of those scenarios for people, or the younger end. If you're a younger couple and you're looking at 529 plans or college plans or any of that, we can run those scenarios for you also. Then outside of the I think there's over 80 different types of reports that you can run that are under the report tab. If I go there and click on all, you can see that here are all of the different reports: annuities, balance sheets, businesses, cash flow statements, educational planning, estate planning, distributions. Just depends on what period of life that you're in. Long-term care, life insurance, your human life value, what's the right amount of protection for you to carry. There's different retirement planning reports, just about anything that you can think of. eMoney, the platform, can run those different scenarios for you. And then lastly, over on the top right, you can see the vault. And again, for example, Jill threw out there Velocity Banking. I don't know that platform personally. I don't know what bank uses it or if it's a specific platform to a specific bank. The vault is the answer when my wife asked me, hey, if I go down in a fiery plane, where can I find everything? And this was my answer. Everything is in the vault. So pretty straightforward, just like a computer here. You take all of your tax returns and you can put them into your tax folder. You can take all of your investment statements, whether it be your self-directed Roths, 401k plans, whatever, and put them into the investment folder. Your insurance policies, whether it be life, disability, health, home, automobile, commercial, whatever it may be, your insurance policies, the deeds to the property. If you've done your estate documents, your wills, living wills, power of attorneys, revocable trusts, all of that go into your legal folder. And then in addition to that, if there's documentation out there that you don't want anyone to see, including your advisor, then you can put those into the private documents folder that has the lock on it right here. And that's really for you and your spouse or significant other to only have your eyes on those. So in addition to that, you can give your CPA or attorney access to your account, and you can limit that access to viewing or printing or whatever you want to do. So just thought I would introduce the eMoney platform. Again, there's just a significant amount of people out there that really have not heard of this product. Again, I didn't invent this product. Actually, eMoney was invented by a financial advisor a number of years ago, and then Fidelity first eMoney for whatever number with a lot of zeros, and they've built it out to what it is today. So just a phenomenal platform for people to be able to use. And again, I think the best feature of it is you can literally take any type of asset and any type of ability and load it onto the eMoney platform. After you do that, then it becomes live. And as long as you keep your links up to date, numbers are accurate on a minute basis. So you always have an up-to-date net worth statement as you go and continue to build your wealth. That's money. Else out there besides I think Jill threw out the Velocity Banking. Is there anyone else out there that has some other program or platform that they may and or may not be using that can benefit the group? So just throw that into the chat. Again, if you're just coming up with any questions on anything, throw it into the Q&A and I will get there. I'll go back to my notes here just for a second. All-in-one mortgages. anyone out there using this product, an all-in-one mortgage? Came up with in a meeting that I had earlier, and just thought I would run that across today's group. Anyone? By the way, as you can see, I threw into the chat, all of these webinars are recorded every week. They're edited and then put up onto my YouTube channel, which is pretty straightforward. It's at Brian Shey on YouTube. In addition to that, they're housed on my website, which is sterlingwyatt.com. Under the podcast and webinar area is where you can find them. And then in addition to that, if there's anything specific that comes up, I had a number of people last week reach out and schedule some one-on-one meetings with me just to go deeper into a specific area that they're looking at. You can access my calendar through my website also. And you can schedule a 30-minute, just an update, touch base, or if you need a little bit more time, there's an hour limit there. All-in-one mortgage. I did a little bit of research on it and plugged in the calculator and took a look at it. And I guess it's like anything out there. You've got upside potential, you've got downside risk. The biggest thing I would say about it is, so let me just explain it from a 30,000 view down. So it's basically, most people understand that they have a mortgage. So, and let's just make the numbers easy in our heads. So let's say you have a $1 million home and you have a $300,000 mortgage. So there's $700,000 of equity in the house. Most people think of having a primary mortgage of 300 grand. And then I'm a big advocate of having some type of home equity line of credit that is open, just an open line. So you may go to your bank and say, I want to open up a line of $200,000. So that is a HELOC, home equity mortgage. $300,000 primary mortgage, and then a $200,000 HELOC. That is the conventional, what I would say the conventional way that most people do their mortgages. And then obviously, if you need cash, you can use your line of credit against the home and then pay that down. The home equity line of credit is normally at a higher interest rate than your mortgage. So you may have a $300,000 mortgage at 3%. I can tell you right now, lines are somewhere, the interest on lines are 7.5 to 8.5 right now. And they fluctuate a little bit depending on what the feds are doing. This all-in-one mortgage is quite different. It is so in my analogy, if you had that analogy, a $300,000 mortgage and a $200,000 line, and you wanted to go refinance that at your bank, then you could go, and if your bank does an all-in-one mortgage, it basically is one product. It's also tied to a checking account and a savings account. And for example, let's say they appraised your home, it was $1 million appraisal, and they will give you 80% of that in a note. So they'll loan you $800,000 on your $1 million home. And for example, then you have access to all of the equity. And this is the downside risk. After I did some research, you got to be pretty financially savvy and pretty frugal and have your I's, your T's crossed, because basically you have access to all of your equity above what you owe. But so in that situation, it's all in one. It's $800,000. Maybe you still owe the $300,000. Which means you still have access to another $500,000. But it's a checking account, it's a savings account, it's all wrapped up in one, and you can borrow against all of that, make payments against all of that. You know, when you do a little bit of research, it talks about that you could pay directly towards the interest, so you can knock down the interest a little bit faster than in the conventional mortgage, but at the same time possibly pay off your primary home faster. However, all of it is wrapped up into kind of one account, and you've got to be able to deal with the debits and credits in and out. Anyone else have any information on that they want to share with the group? Sounds similar to Velocity Banking. Just got mine via a first position HELOC. Just got one, pays down bad debt faster. Okay, So to me, it sounds like you're possibly using equity or using the equity very similar to if you were using a home equity line of credit to pay down bad debt faster. So yeah, it's definitely that. There's there's just like any other mortgage out there, there's all kinds of calculators. My, I guess another downside risk, if you would, it seems the research seems to show that the interest rates on these all-in-one mortgages are, I would say, a little bit higher, or maybe significantly higher, especially if you refinanced over the last number of years when interest rates were just way, way low. For example, I have a lot of clients that are under 3%. Personally, I'm right there at about 3%. So the rates out there that I'm seeing are 5.5, maybe 6, because all of it's, wrapped up all in one. So not sure if I think you really got to do the math and run the calculators or get somebody to do it for you to make sure that it actually makes sense for you to look at doing that. I can tell you, I threw in some numbers just real quick, and whatever site I was on told me that I was not a good candidate to do it, probably based on the low interest environment that I currently have on my primary home. So, but certainly if you can pinch the numbers, dot the I's, cross the T's, and make sure that you're not completely going into all of your equity, then it may make sense for you to do that. That's your all-in-one mortgage out there. Speaking of banks and interest rates and all of that, from what I'm hearing and all of the research right now, the feds, the government they're still trying to figure out this inflation thing. And at the same time, another quarter point is in our near future regarding rates. So they're certainly not going in the south direction by any means. I would tell you to keep cash on hand. And if you don't have open lines, talk to your bank. I highly recommend having some type of open line that if you don't tap it, you're not paying any interest on. You have and or need and probably will want to have cash. But anyone else out there that has messed around in the mortgage world recently in that environment, let me know. I'm going to pull up my notes here. There's a couple questions last week that came directly to me, if you will, and it had to do with I think Scott had a number of questions last week regarding the banking on yourself, the infinite banking concept. There was a couple other questions that came through regarding product, and I had talked a lot about looking at the right carriers and looking at the right product. And there's a couple of questions regarding the difference between using a whole life insurance product and possibly using what I call an IE or an indexed universal life product. There's a bit of controversy in this area out there, especially if you roll up your sleeves and start digging. If you don't understand non-direct recognition whole life insurance, which is a mouthful, I would tell you if you put 10 insurance people in the room, 8 of them have never heard of it, and the other 2 might understand it. So if you're looking at that strategy, which is done right, designed right, works extraordinarily well for debt reduction, and if you want to use your asset, which is a life insurance policy, done right, it is an asset. And if you want to use your cash value, I don't want to use the word investment, which is why I'm pausing, because I believe life insurance is an investment. Life insurance is insurance against your investments not working out. But you want to be looking at using a mutual-based insurance carrier that sells a product that is a direct recognition product. And what I mean is that if you have $100,000 of cash value in your policy and you borrow 50, they will continue to give you interest and dividend on the whole 100. It's just that simple. It's a mouthful, non-direct recognition whole life, but that's basically how it works, because they're not loaning you your money, loaning you their money and using the cash value and the death benefit as collateral against that loan. So as I'm talking through that, if that's prompting any questions, feel free to throw them out there. in regards to not using a whole life insurance product and possibly looking at using IUL, which I see every day. There's questions all over social media of which way is the best way to go and all of that. If it is a non-direct recognition company, there's just no way that an IUL is going to beat that, because they're not giving you interest in crediting and or your dividend, the whole value. So I just want to be very transparent there, and because that's a strategy that people are talking a lot about right now in the economic environment that we're in. It is certainly what the wealthy have used for decades, centuries, that understand how to use permanent life insurance as an asset, or more importantly, as a small sliver of your overall portfolio allocation. Again, you guys are pretty quiet today, but if there's any questions on that, let me know. If you want to go deeper, schedule a convenient time to talk with me just on a one-on-one basis. And I've got a number of meetings just off of last week because there were so many questions about it, that people have scheduled, just very, very clear. And if I'm I don't mean to be not energetic today, but my run that I got in this morning is creeping up on me in the afternoon. I'm ready for a cappuccino, I think. Questions on anything, again, throw it into the Q&A rather than the chat. So let me scroll up here. Thank you, Lee from Richmond. As a preview of next week, I'm going to talk a lot about multifamily syndicated real estate investments next week. I've got a gentleman that I work with on a weekly basis in this area. They've have 3 or 4 different properties in the United States, mainly in the Southeast, that they're looking at. And that's an environment right now that's still pretty good regarding the universities all over the country. So, you know, it's people are looking for double-digit IRRs, and some of these properties are close to 17, 18, 19% internal rates of returns with 2 times multiples. So it's a pretty good strategy to start looking at. Certainly, if you're interested in the residential space of real estate, I think I'm a little bearish when it comes to commercial real estate right now. I think that's something that just about everywhere in the country is bearish on right now. So I'd be a little bit act slow in that area, is what I would tell you. So I've got 142. Those were the 2 areas I wanted to introduce the eMoney platform that I use with everyone that I have a working relationship all over the country that has access to that. Thank you, Jill, for throwing out the velocity piece. Again, I'm not sure if you can get that on your own or not. So again, I'm going to close this thing up here in a second. If anyone has any other questions, I know that it was a little bit lean today, but just wanted to introduce those 2 areas. If you missed last week, I would highly recommend, and the week before, where we had Paul Haven, my private banker, that was on, and we talked a lot about the banking industry and what he believes we're going to see moving forward this year and in the next year with the political environment that we're all in. Jill threw out there that Joseph on Chris Nagel's team is an expert on velocity thinking. So if anyone out there knows Joseph on Chris's team, feel free to reach out to him, and I think he can certainly, according to Jill, point you in the right direction. So thank you, Jill, for putting that out there also. So guys, if no other questions, I'm going to sign off for this Tuesday. Again, we'll talk about some multifamily opportunities next week, and the tax and some of the tax benefits of using that. In addition, next week, we'll probably get into using your self-directed IRA or some real estate opportunities And without a doubt, we will talk about continuing to move money out of a taxable environment and get it into a tax-free environment as rapidly as possibly can, which we will talk about the Roth conversions and different opportunities to be able to do that. So with all of that said, jump on YouTube, like the channel. Also, I just wanted to mention, if there's someone else out there that needs to hear this information or wants to tie in, feel free to send that registration link along so they can get into the Tax Tip Tuesday family. And outside of that, look forward to seeing you guys next Tuesday. Take care. Have a great week.